Here. We have to wait. Wait. Um, Anything that we actually used to. So you want to just look at the financial statements quick, and I wrote some notes. I mean, there's only 1 month in the financial statement, so the year to date's the same as July. We are favorable on salaries and wages, and I reminded myself that there were 3 pay periods. So it's running about $10,000 a pay period favorable at this point. If it was 2 pay periods, the favorable variance would have been less and everything. So it's kind of concentrated like in this month. Fringe benefits are more favorable than I would have thought they would have been. And then as I looked into it, I was reminded that because there were 3 pay periods, there was actually like 3 withholdings for health insurance, whereas health insurance is flat for a month. So that lowers it a little bit. And the fact that so many of our fringe benefits are a monthly cost, and now you're looking at 3 pay periods. So as a percentage, it's different than if there was only 2 pay periods. So those weren't too bad. Library materials usually is favorable at the beginning of the year. I tried to sort of backload the budget a little bit, but I didn't want to get too carried away with that. Professional fees, I know that our attorney, as of when we finalized these, had not submitted an invoice. That's not all of that. I think she's about $1,800 a month standard retainer, so that's a little bit of it. And when she does invoice it, it'll basically get booked to the right month. And when we do the next set of financial statements, what I always do is come up with the year to date, and the month is whatever the last year to date was, less this year to date. So even if Colleen books it in July, and it'll show up in the next financial statement, so that we're always looking at all of the activity and not just, so anything that goes back prior still gets picked up in the current month. I think, wasn't building maintenance, repairs and maintenance, Colleen and I just kind of both looked at it separately, and there was one invoice for about $39.25 for a place that was described as 1 year of chemicals. So I think we buy our cleaning things in bulk for approximately a year. And you said there was a Granger invoice for about 3,600. That was a bunch of cones and things out here.
Yeah.
So that explains part of, most of, I think, the unfavorable variance in line 17. I mean, the rest are up and down. The interest and investment income is fairly favorable. And when we were putting together the budget, I think we had no idea what the Fed rate was going to do, and we were very cautious and didn't, we didn't want to be aggressive in booking investment income. So I imagine that will keep going for a while until, the Fed rate may go down later in the year. It's hard to say. I think that's it. I mean, for the first month to be 66,000 favorable, I think it's a lot, but we tend to run favorable. And I imagine you're in the process of trying to hire people and everything.
Yep.
Would like to do that.
We've got 3 more people coming online in the first week in September, so
Okay.
bringing us down.
Okay. In terms of the balance sheet, I mean, I don't think there was anything too unusual on that. I think they're doing a good job managing cash and cash equivalents. I always like to see that number low because it means that the rest is sitting in the NBT IntraFi account or the LPL being invested there, so that's good. Prepaid expenses always goes up in July because we prepay virtually all of the insurance during the month of July that relates to the year. And because it's such a large number, we do put it in prepaid and then expense it ratably over the year, over the 12 months. Ratably is not a word that I use very often, but it is the appropriate word for prepaid. Yeah, that's kind of weird.
How do you spell that?
I don't know. It's about this. Yeah, I don't think there was anything else unusual. Short-term investments are down because we had to fund the 355 in expenses that we ended up with. I think that's about it. Any questions on either of those?
This is just a kind of I guess maybe a big picture question just on the total amount of investments, the money in cash and investments that we have right now. I know that always at this time of year where we're waiting to receive the tax levy, we're always running off of our, reserves. How much, of this, what do we have, 4 million, how much of that, do we need to cover, that's just to float us until the tax levy, and how much is just kind of additional extra reserves that are.
So I will send you the bottom part of the spreadsheet that I didn't print out, but when I put the budget together month by month for investments, I did kind of a cash flow where we started out with the cash at the beginning of the year and then took our budgeted loss until about November. And then you'll see it go back up. So it will show all of those things. But I thought when we talked about it at the last time, thought it was about $2 million. I'm trying to think, July, August, September, October, 4 months, probably not quite that much because this month is a little bit high because of the extra payroll. So maybe about $1 million, but I'll send a spreadsheet out tonight that shows like the projected cash flow.
Right.
That'll say that exactly. And that, I mean, I think we put that in the context that you almost could sort of designate that as the amount that you sort of have to just get by from between levies, basically between, I think, might be March when the last one comes in until the following well, this says October is when we got it last year, so.
Yep. Okay.
Um, I'm gonna hand this out, especially since it's so few.
Yeah.
So just,
Is this?
Is that the same one that I won?
oh, did
I
you
have
hand it out? Oh, I just-
Yep.
Yep, I put together a packet for everyone.
Yeah, yours actually looks better too.
Okay.
So just for reference, like when we spread the budget, you know, we try to do it as logically as possible without getting too carried away, basically. So payrolls, you know, July had 3 payrolls, so we take 3/26 of the salary expense and put it in July, and the other months will have 2/26, but there will be 2 months that have 3 payrolls, just the way it falls every year. And the tax levy, we try to follow the history of what's happened. Last year, we got about 94% of it in October, so we put that in. I think I mentioned before that when I put together actual numbers, when it comes to the levy, I always change the budget to match what came in, because I know that we're gonna get exactly that amount, and any difference will go through the adjustments or the pilot or tax certiorari or refunds that we have to make. But that number is, you know, about as good of a number as you can get. And there were certain things like utilities seemed like they peaked up a lot in December through February. So I kind of loaded it a little bit more in the middle of the year. And I think that library materials, I thought I came up with some way to kind of spread it out a little bit. So I started out at about 88% of the budget and worked up. I kind of went 12% lower and 12% higher at the end to just phase it up. And it gets it a little bit closer, but there's not really any firm science to that. And there's certain things like the New York State retirement that we pay in 1 month, usually November. So there's a $310,000 expense that just hits all of a sudden in November. So we budget it in that month. So I just did in case there is any questions on that.
That's very helpful, actually, to see what the month.
Yeah.
Kind of timing of, you know, how this.
And it's,
Yeah.
you know, we try to get all the expenses in we can to give a good month. But like I said before, the lawyers didn't send an invoice. I don't know why, because, well, they just didn't get around to it, I guess. But it's not really big enough that I think I would accrue it or anything. I thought like, oh, we should accrue it, but it's not worth it. Having said that, I did accrue audit fees, because the audit fees, it's not just a matter of timing. It's, you know, at some point we're going to get hit with invoices. So I did accrue about, I think 1917, which was the budget, in as a liability, basically. If it were just a 1 month lag, probably wouldn't have bothered, but you know, it'll probably build up to a pretty good sized number by the time we get to the audit and everything. So if you do look at it and have any questions, and it's something that, you know, we can kind of change and move around. I wouldn't change the total amount per line item, but if there was some reason that it just looked, you know, like we totally blew it, then, you know, you could always go back and redistribute it by month to be a little bit more accurate. Want to talk about the most exciting thing, the audit? So we keep saying that it's like, you know, oh, we got to do that and everything. And it was going to present certain challenges. Oh, and the other part is maybe at the next meeting, we can review the audit that I did send out at one point, but we have new members on the
Mhm.
board. But if we can review it and then present to the full board, then that'll at least get that out of the way. But the challenge that we had was we have a general ledger system that you can only have 2 open years. And that created an issue in closing the year that we did close, June 30th, 2022, because by the time we resolved the accounting for the grants and whether or not we had to offset them, and we did not, which benefited the library, it was too late to get all the entries into that year. So I got a trial balance, and we've got the audited financial statements. And I went through and compared the trial balance and said, well, that's off because of this entry that was made in the next year. And, and said, okay, so we're okay. But in thinking about getting ready for the next 3 audits that we want to do, either, together or in rapid succession, but I'd rather just do them all and get them done with. I realized that any adjustments, we didn't have a way to get them into the general ledger. And it's like, okay, so we're gonna have to track them manually. And like I do all kinds of weird accounting stuff all the time, and that just that sort of overwhelmed me. And we started talking about the general ledger system and decided that it wasn't working that great anyway. So we went through a process, I guess, at the end of, I don't know, a month ago or so. We talked to Pete, Natalie, and Colleen, and we basically converted the existing general ledger system, Sage 50, to QuickBooks Online. And we converted, there was 1 year of really good data of history, and the other years we imported enough that we have balances for years going back to 2021. So now if we have to make an adjustment, you can do it and it'll roll through all of the years and we don't have to worry about that. And I guess simultaneously, we were paying about, I don't know, $2,200 for Sage 50 and about $2,000 a year for a VPN hosted thing to do its thing on.
To make it extra secure.
Yes, okay. And QuickBooks Online, we can get through TechSoup, which is a place that works with non-for-profits and get some deals. So instead of paying, I don't even know what it is a month, it was 130 or something a month. But through TechSoup, you can get it for $132 a year or something like that. So basically, we saved $4,000. I promised Colleen that she would like it after a while, but it took me a year. Like I used desktop QuickBooks and I had 3 clients that used it online and I struggled for the first year. It was just miserable. And now it's like, it's just nice. So the other added thing is, like, I can look at it remotely and everything and look and see, if repairs and maintenance are up, it's like, well, why is that? And, and see the invoices and everything. So, so far it's worked. And there was a lot of challenges along the way. I mean, the existing checks didn't work with QuickBooks Online and we resolved that pretty quickly and everything. So I think that we have the technology to do the audit. And Pete and I and Colleen have been talking a little bit, and I think we're going to try to meet next week. So what I did was now that all the balances are in there and I can download them easily, I put together a schedule of the last, 22, 23, 24, 25, 5 years of history of all the different accounts. So we can look at it and say, okay, what do we have to do to each of these accounts to get ready for the audit? And I did that last week and just looked at some of the things. And, overall, it's interesting because, when auditors look at numbers, auditors love consistency. I mean, it can be dead wrong, but if it's consistent, everybody's happy, basically. My father used to make fun of accountants because of that. But in looking at things, it is fairly consistent. I mean, you see the tax levy going up. You see revenue is fairly consistent year to year, and there's some changes that we can look at. But I think that's a start, and then we just have to look at, there's a number of items that we have to do, like actuarial calculations to calculate, I think, the sick time liability for our retirees' benefits. And there's some things that you have to do with the online pension system to get numbers, to book liabilities and things. But I think if we sit down, I felt better having looked at it saying, okay, that's not too bad. I think we can, I think we can do that. The other thing that we wanted to do, and I sent Pete a draft that he at least casually looked at. I mean, I sent him the draft at like 11:30 this morning of, it probably would have been more exciting to just let it go at that, but of RFP for an audit, basically, and it kind of describes, our last audit and some of the things that delayed the completion and just what we're looking for and everything. So I think, especially because there's 3 years that we would want to look at, immediately, we'd like to identify some auditors, certainly our existing ones, the Bonadio Group, there's a couple others, but I think they can't be too large. I don't think KPMG, Pete Marwick, or Cooperson, whoever Coopers is now, I can't even remember who they are anymore. All the big eight have changed. So I think we'll identify good sized firms that can provide the service and get things. And I mean, my suggestion would be that I guess the three of us and Natalie sort of review it and come back to the finance committee with a recommendation. But I think we'd like to do that. I forgot the schedule I put together, but
You were hoping to get it done over the holidays, like leading into Christmas.
yeah, before that and everything. And I think that, I mean, my goal would be, just because we can't keep lapping years, would be to have the 3 years audits done no later and hopefully sooner than June 30th of next year, which is, I mean, it's a fair amount of work, but I think if we don't do it within this year, we're just always going to be behind. And then the next year will end June 30th, 2026, and try to get that done within 6 to 9 months. I'm just looking to see if there's any adverse reactions, but, and then see, what we can do to kind of speed it up a little bit, just to get back, better. And that's something that, I mean, I can't explain why it took so long. I mean, Mike lived through it and I did, and it just seemed like everything was an obstacle and nobody.
Well, I mean, that one issue just held us up forever.
It did. And I think we kept, I think that, we knew we had to get a legal opinion, and I think, we tried using our attorney, and, they just didn't have the expertise, and somebody recommended somebody at, I can't, what's it? Whiteman, Osterman, and Hannah, or they, some WOH. And, that took a month to have somebody not get back to us, and it just went on forever and ever. We tried the bond counsel for the school district, thinking like, well, he's gonna know this because he's involved, and after, going back and forth and setting up a meeting, he basically said that he had a conflict of interest because he represents the school district, but not us. And it just seemed to take forever, but I guess it is what it is, but we gotta definitely get it done, and we keep saying we gotta get it done, but I think we're at least taking some actual action steps now to do it, and I think I hate to say that the committee and the board should hold this half of the room more responsible for that, including myself, I guess, because I'm treasurer.
Where I've been, fiscal year ends, the audit starts the next month.
Yeah,
Fiscal year ends in March or December, the fiscal year is in January. The audit is right
Yeah.
after it ends, like that's normal for me. There is no, like, boom, let's go.
and I don't know what's good for the auditors, I mean, because they have some June 30th clients, but there's, they have tax deadlines in I don't know, October, November, and March and April, and it's all over, but I think that if we can be ready, I think that would be good. I think I have more confidence in the current staff that, that everybody recognizes that it just dragged on too long, so. I think what's the most difficult thing is, it's like when you have to do a 990, you have to have it done by, let's see, if you're a December 31st client, it has to be done by November 15th. And you don't get an extension. It's just, it has to be done. Whereas we don't have anything like that. So it's just, I think it's dragged on too long. So.
It would be great to get caught up though,
Oh,
by the end of this year, kind of have things back on track to, yeah.
Yeah. That's kind of my,
And part of it is, I mean, if, in theory, part of the whole point of having an audit is so if there's, discrepancies, problems, things, whatever, you can catch them and correct them. And if it's 2-3 years out before we get the audit, it's kind of doing a lot less,
Yeah.
serving its purpose, I guess.
and I mean, I think we've been pretty candid. I mean, we brought up things that, are suboptimal. I mean, it's like, the thing with unemployment, that just kind of got buried a little bit. And, there were some other things. And I think that Colleen's much better at setting up processes and following that than just, than just having it haphazard, I guess. As an auditor, I learned you can't use random, you have to use haphazard. Random implies that there's some systematic system to it, whereas haphazard is just like, just what it is. So I guess I feel better. And at one point, my goal was to get through June 30th, 2022 audit. And then I figured on my deed, I can move on now. But now it's like, we got to get these 3 years done. And I'd like to see the current year, June 30th, 2026 get done, because that'll be fully on QuickBooks Online. And that should make it a little bit easier because the auditors can access it and just, it cuts out a lot of things. I think the thing I didn't say before was, there's the ability with QuickBooks Online to upload invoices and keep them there. We use it, I think I do 4 audits with like clients that I have. And all the invoices are online, so they basically make a selection and we never know what it is because they just look them up online themselves and we don't have to pull them and everything. So it just does simplify things a bit. So you're not digging out invoices out of file cabinets, so.
In terms of timeline, our next 2 finance committee meetings would be September 16th and October 14th. So
I drafted in the RFP to have them returned by September 30th. I don't know if 14 days would be enough time for us to look at it, or if
cutting it pretty close.
maybe we should say September 23rd, which still gives people 5 weeks, 4.5 weeks.
Yeah, reasonable amount of time.
Yeah, I mean, I'm sure they have an in-stock proposal that they just substitute our name and tweak it a little bit, but.
Yeah, so I think a goal would be if we could have a recommendation to the finance committee on October 14th.
Yeah.
And then approved by the board on the 16th.
Yeah, does that sound not unreasonable?
Yeah, no, that makes sense to keep things moving along.
That's another audit expression I picked up. You often don't say, that looks reasonable. It doesn't look unreasonable. It's like, lawyers probably do the same thing, so.
Can I mention the comptroller?
Yeah, please.
So the other piece of this is that we haven't filed our annual comptroller AFR, used to be called the AUD, annual update data. Now it's the annual finance report. And they have reached out, right before I got here, they reached out to Pete. And they said, you haven't done it in 7 years. in theory, you're supposed to be doing it after you're audited because the final piece is just give them your audited financial documents. If you haven't done it and it's due, and the due date of it depends on what type of library you are at the end of your fiscal year. I think we might be at 3 month, I can't remember. But they get frustrated when you don't do it, and if you do have to do it and you're not audited, then you can put a draft up there and at least tell them this draft, but we don't have anything to do. So I would really like to work on that, but I really would rather we get these 3 years done. And I have to, well, George, you and I have to talk about it because they don't go through me. You have to call the comptroller's office. You have to get an account to log in. You have to assign it to me. It's all through you, and then you can delegate. But I think, we're 7 years out, so go back and do those. I think, I haven't asked them, are you really gonna make us go back and do the ones in between, or can we just pick up here? But having these cleaned up, having our audits finalized, because normally at the end of the year, I will be doing that annual every single year by the due date that the comptroller sets.
We file some report with the state, don't we? Because I know that they reported.
Your report maybe to the
Okay,
SED,
that might.
Yeah, we
Education
filed
Department?
tax cap filing as well.
That.
for the
That-
levy.
I
Yeah.
know there was something that had FTEs that,
Annual report has FTEs for sure.
okay.
So 7 years ago, so it just, somehow this just stopped being, it fell off somebody's
There was
radar?
probably a staffing transition at
Yeah.
some point. Whoever was doing it didn't
Okay.
hand it
There's
on.
no
Yeah.
documentation maybe, like this is, and some libraries I know and library systems, some people were under the erroneous thinking, and I've heard this about libraries, like, oh, we're a school district library, the school district does it. No, they do one, but you have to do one. And even library systems, oh, we don't do it, we're not a library. Yes, you do. So we do have to do it, and they did reach out. I reached out to the Guilderland town, because they do it, made contact with a person there just to say, hey, we're gonna be doing it. And she also had to catch up, I think, somewhere she was. And she said, if you have any questions, let me know. So it's, with everything else going on, it's in a holding pattern, but I don't know how it went.
I mean, because we had audits for those first couple years of that 7 year span, right? And so we just never.
Eventually, the comptroller will put out a little thing and say, these people are delinquent in their AFRs.
Right.
I'm surprised the auditors wouldn't have wouldn't have reviewed that, but they don't always.
I asked auditors some complicated questions previously because of the AFR questions and the balance sheet of what I inherited. And my auditor said, let me put you in touch with Joe Schmo, who specifically deals with AFR. Like, some of it, the questions are not even,
Yeah.
and they don't really know, like, don't forget to do it. I found they sort of two different worlds
Yeah.
for the most part.
This could be the year to just get everything like cleaned up.
Yeah.
It's like. Yeah.
Yeah, so George, you and I will sit down next week, start working on try to finalize that. RFP.
Yeah.
Yeah,
And if you can get everybody together,
I'll assemble a crew.
I don't think I have anything going on too much, except Wednesday afternoons, I have a meeting with a client that I'm liking less and less.
Are you sending out specifically to firms and then, or also,
So,
I've sometimes sent it to people that I knew, but that also posted it as open to anybody who's,
I guess,
reading
are
them.
we required to post it? And
Yeah.
Okay.
Yep, we post it on our website. We should probably post it to the newspaper of record. I don't know if
Yes.
we did that in the past, but.
yeah,
I've
you're
said it in the
supposed
past.
to.
Yeah.
And because I just have a couple choices that I've worked with, a couple
Okay.
suggestions, not huge.
Maybe after the meeting, you can tell us.
Okay.
I think they have to, I don't think a 1 or 2 person firm could do it. And I think, you'd have to have at least governmental experience, if not library experience, and a heavy not-for-profit. I don't think you want like a firm that just does, construction accounting or something.
Yeah, these are 3 I've worked with at
Okay.
library, nonprofit, or
And maybe we could, I tried looking up in the book of lists, but I had to pay to subscribe to it online, so I'm hoping the library just has it or something.
That probably.
Whatever the
Business Journal.
whatever the business journal is. Yeah. I mean, if you know any accountants that you are thinking of, but I'm not sure people deal with them too often. I guess we didn't talk about the investment report, but we did finish it and I think send it out.
Yep.
And, you know, I don't think there's anything.
Yeah, we touched base with Broadview to set
Yeah.
up, so we've got the LPL investments, half of them are in a 12-month CD. The other half are laddered between a 3, 6, and 9-month CD.
Okay.
That was to lock in rates over 4%.
Okay.
A lot of their future rates were going down, but we wanted the flexibility and we wanted to touch base with them more often than once a year. So that's why we staggered or laddered half of them. But so that's all taken care of. And Colleen and I have it on our calendars to touch base with Jim at Broadview in 3 months.
Good.
Colleen and I, we can't vote on it today because we don't have quorum, but Colleen and I are looking at a credit card recommendation to make for the board. So the challenge we run into is currently with Citizens Bank, we have both individual card limits, but also a shared limit. So there's 2 different opportunities for us to bump into the limit, which can be really problematic if we have sent somebody to a conference with a library credit card and it gets denied at the hotel because we didn't stay under the limit. Citizens will not do further business with us because we are not a banking client. That's fine. We're not married to Citizens. But we are a banking client of NBT. So we're putting together a proposal where the current 3 cards we have, one stays with me, one is under Sean's name, and one is under Natalie's name. And staff members can, sign them out if they have to make a credit card purchase. That presents a different challenge where if somebody signs out my credit card and then they go to the grocery store and they don't look like a Pete, that can be embarrassing. So we've talked about perhaps putting one that's just not under a name, that's just under Guilderland Public Library, and that way be a little easier for staff to take it traveling around the road with them. But we looked at NBT Bank because we're their banking customers and they do credit cards. So we thought that might sidestep the whole issue that we ran into with Citizens. We're also proposing increasing the limit a little bit. Again, it doesn't matter until we really need it, but conference time, November and in the spring, when we're sending people out of state, that's when it really matters. So 10 months out of the year, lower limit's okay. 2 months out of the year really makes a difference. But Colleen and I are also, we know it's a board priority and we've talked about it a couple of times. We'd like there to be more transparency in our credit card transactions. So Colleen and I have stayed up to date on kind of coding those out every month and being what accounts are going under, what they're being spent on. But we're also strongly encouraging staff to migrate off credit cards when they don't need them and to invoice whenever possible. Again, a multi-pronged attack on making sure we don't bump into that limit.
And I forgot to say that the financial statements, I think, are the first ones in a very long time that did have the statement that came at the beginning of July is booked in here and everything. So it's like we're at least caught up on that and everything. And I think I saw that it was, yeah.
I paid it. I mean, it's in there.
I saw that it, yeah, that it was, that the bank took the money today or you paid it or however it works or something. So, yeah.
So we'll come back in September with a formal
Yeah.
proposal to be voted on.
So,
I saw there was something in the email too about a $5,000 account that we want to close. The idea is that's one of these restricted, it was some restricted gift or something like that.
Yeah.
And we can just deal with that with like a bookkeeping entry. We don't need a separate actual physical bank account.
Perfect. Yeah, because as we were trying to understand the structure of our NBT accounts, we probably have a lot more accounts than we need.
Yeah.
So, just for our sanity, I think closing that one, we can, Yeah, we'll keep
Yeah.
track of the expenses
Yeah,
for
I've
that.
learned the history of it, but you just make a work paper and keep your,
How much, I remember it wasn't much, but how much do we have? There was a couple little like amounts that we had that were restricted.
So there's about, oh, it's on financial
Oh, is
statements.
it?
There's $6,320. About half of that is in temporarily restricted funds and a couple are in permanently restricted, also, endowment type funds. And I remember when I was talking to the first auditor that I had contact with here, who can't think of his name. He was a nice guy, but he went and he left the firm and I forgot where he works now. But he said, I really doubt those are true endowment funds. But nobody can find any records about it. All we can find is the descriptions that are in the financial statements. And like, I don't feel comfortable in just taking funds previously identified as endowment and calling them something different, So I think we kind of have to leave those. But I think that we should, allocate interest from the intra-fi on those funds, which are only a few $1,000s in funds. So you might be talking 4% times 3,000. I don't even know what that is. Is that $120?
$20, yeah.
And, and just say, the interest was supposed to be for programs related to so-and-so. Yup, we spent that much. And I think on the special purpose, we have to look at it and say, the purpose was described as this, just figure out a way to spend it. I just think, while accountants love consistency, it's like when you have a temporarily restricted something, I hate to see it the same because it means that you got a gift that you didn't spend.
Yeah.
And I guess, I don't know, if another endowment gift ever came to us, I guess we'd have to really look at it. And decide how best to use it and structure it so that we, 10 years from now, there's not another group of people figuring this out.
And you said for the ones that have been labeled as endowment, we have no, no record of the original gift that.
David looked at it.
Yeah,
Do you have
it
something?
lives with our programming department.
Okay.
So
Oh.
they've kept a record of it. What happened was when we got the gift, a lot of activity happened. And then they were like, oh, we have, this amount left. And then they didn't spend it and everyone kind of forgot about it. So now it's been passed down from
Okay.
Oh,
manager to manager,
Okay.
but they have it.
But
So
the
then-
true endowments or the temporarily restricted?
Sorry, the temporary.
Yeah, okay,
Yeah,
that one.
yeah.
Okay, we should look at that then
Yeah.
and see what they show.
Yeah, because they've got physical paperwork that we should probably digitize at some point.
Yeah,
But
we
yeah,
should.
we've got physical paperwork, the expenditures.
the auditors would want to see that too.
And it's funny because normally the auditors would have a record of it, it's like new auditors would ask for something for their permanent records and they didn't have it, so. But it's not a lot, it's just, I think, I'm not sure you can easily take an endowment fund and close it out. I think there's a whole bunch of processes with New York State, somebody, I can't remember who does that. But I think it would be difficult, but yeah, that was something that we were looking at, but it never got finish line. So I'm gonna ask this question and embarrass myself, but the finance committee can't review the bank changes. Can you just take them to the board? But it would need a motion and a second because it's not coming from the finance committee, or would you rather wait an extra month and just, yeah, that's probably
And wait an extra month for,
for the word approval?
so have them approve it. Well, I mean, we can't take it, on Thursday because we don't.
Yeah, I mean, I think the proper order of things would be for the committee to approve it
yeah,
first
yeah,
and
you're
then put it
right.
up to the board rather than kind of bypassing
Yeah.
the committee and going straight to that. I mean, I think we could
Yeah.
go straight to the board, but it's kind of
You're
like,
probably,
to
yeah.
the
there's
extent
nothing-
possible, we should do things through
Yeah,
kind of proper channel,
yeah, it's not.
It's not urgent, I suppose.
No, yeah. And then, as long as we have a couple minutes and Mike will, well, So Colleen and I have been talking about, what is our policy to capitalize assets? And we can look at history and tell that, items over $2,500 with a useful life, usually it's 3 years. I've seen some that just say more than 1 year. But, we're looking at that saying, we should probably just increase it. But what would the process be? Would that be considered? I mean, it's an accounting policy. Is it a departmental policy that the finance committee should know about? Or is it a policy that has to go to the whole, big policy committee, which seems like overkill? for
I
that?
don't think so, because I mean, I don't think, like, we as a board are not adopting, accounting standards for,
Right.
we're just expecting you to, follow, acceptable practices,
The board has to follow them and is responsible for them.
Yeah,
But it just seems like,
I think if you're making a specific, change in the way that you're accounting for things, that's something to kind of inform the committee of. But I wouldn't think that that's something but it certainly doesn't seem like something we would adopt a board policy on.
okay,
I'm not sure. I feel like I would just double check the comptrollers.
I think I
I mean,
looked
I've
it up
had-
and I couldn't,
You couldn't find it?
well,
Because it affects how you're displaying your expenses. I mean, I don't know, but at least it needs to be adopted. I think that's the thing. Which, yeah, I think it has to be adopted.
well, we'll think about that. We
Yeah.
can look at the state comptroller. I looked at something and I didn't see specific guidance on,
I mean, maybe it's as simple as the finance committee adopted it.
Yeah.
Or the policy committee adopted it, just so that it's not George and I going, yeah, we're gonna capitalize only 2,000.
and I guess there's not a lot of things where there's a lot of options, capitalization is one thing. But I'm not sure there's a lot of other things that, that you have a choice of what you want to do.
Something like that, but-
Maybe the auditors would know what the process is.
I think I asked, this very question came up during the audit, one of my audits, and they said, we don't care how you do it, just be consistent. I swear.
Yeah,
And pick it and they thought ours was too small. Where I was, they were like, why are you gonna take the time to capitalize something that costs,
yeah,
every computer?
yep.
What's the, if you have a transition, right? So you've been doing it based on, you 2,500 and then you bump it to 5,000. How does that?
Usually just prospectively, so any new, like if you adopted it as of the beginning of this fiscal year, then any purchases would
Yeah.
go there. And I asked previously, when we were doing the whole accounting for the project, it's like, I asked, do we have a copy of the capitalization? No, we don't really have one. And it just seemed ironic that we were in the middle of a major building project where we capitalized $3.3 million of assets, but perhaps we didn't fully have a policy. But it does appear to be 2,500, but often with a big project, you take little components of it and they're all lumped together as one big asset. So, I think it was fine. I don't think that was a big deal, but it just seems like we should have something, and the auditors would probably at least ask about it. And usually it's disclosed in the financial statements, so it should be there, but I guess we'll have to think about whether there's anything else. That might be the only thing I can think of where you kind of can go different directions, so.
Yeah, depression. I don't know. Yeah, I don't know as far as whether that's something that needs a vote or anything like that. I have no idea. But I mean, it seems like policy wise, we don't currently have a policy that says that 2,500 is, there's no,
Right.
it's not like the board at some point in the past, adopted a policy saying we're going to capitalize anything over 2,500, So it seems weird that we would have to change it by a policy if it wasn't adopted by a policy in the first place.
Do you know,
Right.
was it ever mentioned by the auditors in our financial statements before?
Yeah, I
Did they
did not
say?
see it in the financial statements. You know, because usually it is in there, you know, what your policy is and how you depreciate it and things like that. I guess to me, it's like, when you capitalize something, the fact is, we had to take all the money out of the current tax levy to pay for it. So what's the point of spreading the expense out over the next 5 years or whatever? Because, you know, it's something that you had to take out of the levy or our reserves or something like that, so.
Well, that's, you know, if we ever do the changes to our kind of reserve policy, that's something we play in, because that was one of the things we had talked about was larger capital expenses to pay for them, not out of our annual, you know, budget, but out of a reserve that would contribute to that reserve every year and then pay for bigger ticket, you know, repairs and, you know, things like that out of that. So then the accounting would kind of match up with our actual practice of, and to some, I don't know.
So, and I think we have to get further into the audits to do this, but, you know, Pete and I talked a little bit about this, and we might have had different impressions of of the timing of when you would set up reserves. I mean, as we put a budget together, we could certainly designate what the budget is for and say, you know, it's for, you know, this line item is because we know that tax certiorari is going to become an issue because, you know, the place down here worth $36 million thinks that there should only be $3 million, and that'll probably hit us eventually. And, you know, whether or not they'll be successful, I don't know. But I guess we could identify it as part of the budget. But I think we also, at the end of a fiscal year, as we're putting together the audit, we should look at the numbers, and at that point, the board should say, we want to designate this amount towards capital improvements or whatever, because then, you know, the year has gone by, we can see exactly what happened. We can see if part of that money had to be used for something else during the year and redesignated. And I think it's good for the board does have to be a board designated fund, the board has to have a resolution and everything. And I guess the point I've tried to make is, you know, our budget did say it showed in the budget an amount for capital improvements. So whether that was our intent really, so I think as we get the audits done up through this year, this June 30th, 2025, we really need to have a discussion of whether or not we should take some of that money. And I think we're almost trying to, you know, I think we're trying to find a textbook that tells us exactly what to do when it's not going to happen. And I don't know if the number should be 1 million, 2 million, 3 million, but I know it could be whatever we put in the budget last year, which was
100.
well, this year it was 116 or something. Last year was several hundred thousand, and we certainly, our results came in favorable to that. I just don't have it. This year was,
Is that reserve? Is that what you're talking about? Just the?
Yeah.
120?
120, 142. Last year it was larger.
236 is the number that's popping out in my mind.
Yeah, that sounds about right. I'd like to get all this done this year. This year could be like a pivotal year. It's for a bunch of reasons.
Yep, 236, 766 last year.
And I know we came in really favorable even to that. Last year,
Yeah.
we didn't have anything really bad, so.
Yep. I think that was it for the stuff we want to talk about, right?
Yeah, anything you all wanna?
No, I'm gonna try, since we got some new board members and everything now too, I don't know if I'm gonna look at it again and see if it needs any updating or revisions, but recirculate that reserve proposal to the board and everybody again, just so we can kind of start figuring out what are the concrete steps to move that forward.
I think the important, I don't remember everything about it except we were trying to make sure they were board designated fund and not reserve as defined by whoever the office,
Yeah,
I don't know if it's state controller or somebody else. But just because then you'd get into a lot of regulations and everything. And, maybe, as we engage the auditors, maybe they'll have opinions, but I know that, I talked to the manager and, and she was in favor of it and everything and just thought that it would be good. And I've worked for places where the board has designated money towards certain things and, it's something that, I don't know, I think we're overthinking it or something. And the fact is you can do it. And if it doesn't work out, not that you want to plan it that way, you can undo it at any time. It's not like
yeah.
just a resolution. So it's not, but I think it just shows the intent to the community and everything and helps us explain why we do have, a good net asset. So. All right,
Yeah, I guess we're done then.
thank you.
Thank you, George. It's a lot. Yeah. Thanks, Colleen. Thank you.
Came in today saying that I'm falling in love with